Hello, everyone, and welcome to this trading psychology episode 6. And today we will talk about the importance of sticking to our trading plan. Now, in order to stick to a trading plan, we must first have or create a trading plan. Right, guys? And I see many of you that I recognize your names, especially from the live trading webinars. Welcome, guys, and thank you so much for your engagement and your support. I hope I'm adding value to your trading journey, and that's my biggest focus. That's where I want to focus, to be honest. So Teresa said, greetings from Mexico City. Thank you so much for joining us, Teresa, and welcome to the webinar like everyone else. So today's agenda, we will talk about the importance of trading disciplines. We will explain the trading discipline challenges for a trader and how to overcome them. And we will talk about trading plan. How important is a trading plan in maintaining discipline? All right, guys. Now, remember, as I already mentioned in all the webinars, I try to keep them within the length of 25 to 30 minutes max. So you walk away from the screen and you install some new disciplines about trading, okay? And of course, you implement them next time you will be in front of your charts. But before we start, our risk warning simply states that this general is used for training purposes and not to give any investment or kind of financial or personal advice or any recommendation. For those who don't know me yet and it's first time you join the webinars, my name is Theo. I'm a certified financial and technical analyst and member of the Society of Technical Analysts. I have more than 10 years experience in trading. My highest education is a master's in physics. When it comes to trading, I usually trade on the daily charts. And if I go to the lower time frames, I do that so on the DAX 40 and on the US Open with the NASDAQ. And I prefer the 5 or 1 minute chart for the scalping. And in Admirals here, my full-time job is investing and trading educator and analyst. So about Admirals, just in 1 minute about our brokerage firm. We are a Forex and a CFD broker. We offer thousands of financial instruments. We have support in any language you speak. I'm sure we can cover it. There are, I think, 20, 30 different languages we can provide support. We hold multiple licenses by Cyprus. Some of them mentioned here, most of them no. In Cyprus, we are under the Security Exchange Commission, Cyprus Security Exchange Commission, or CISEC. In London, in the UK, after the FCA, in Estonia, under the EFSA, in Australia, under ASIC, we have in South Africa, in Canada, and in many more. Spreads, we try to keep them as low as possible when we do scalping intraday, general trading, because we have to deal with the spread, and we try to keep them as low as possible. You can access our instruments through either MetaTrader platform, or from now you can access them through our Admirals platform. You can find it on our website. You can log in there. I created a tutorial on how to use it, but the team soon will edit it and upload it on the YouTube. So please make sure you subscribe on the YouTube channel if you haven't done that. So I will share the link in a while with you. So let's go straight to the subject of today's webinar. So how important is to apply trading discipline. Now, let's clarify what trading discipline is and what refers to. Trading discipline refers to consistently adhering to a trading plan and a strategy despite any kind of emotional trigger or any emotional fluctuations. Okay, guys. So we say that we apply trading discipline when we are focused and without questions and fears execute a solid trading plan. Many people, they put so much effort to fight with themselves when they experience few losing trades, and they start questioning their trading plan. Why did I lose? My trading plan is not right. I have to change my trading plan. But in reality, what they really have to change is their attitude towards their trading plan. Trading discipline is about following rules, managing emotions, and staying focused on your goals. As traders, as retail traders, we are challenged with dynamic fluctuations of the price move on a daily basis, on every single time we observe a chart. I can bring a chart in front of you for 20 minutes. I can go to the 1 minute chart and you can see 20 candles moving up and down, some of the forming a recognized pattern. But what's the real issue when it comes to trading discipline? People, they don't create a solid plan and they try to trade a plan that they don't feel comfortable to trade with. So first, we have to create the plan that is in line with our behavior, with our character, with the way we would like to trade, with the way and how we identified ourselves as trader. And that's, guys, this is the root of trade, in my opinion, of trading profitability. The root of a disciplined trading activity is the trading plan. And a trading plan does not only involve execution and market analysis. The trading plan involves many things. We're going to, in terms of psychology, we will talk about towards the end of the webinar, the importance of trading discipline. As you see here, there are three aspects. The first one is risk management. A disciplined approach helps control potential losses and preserves capital. Imagine for a second, you enter the market, let's say you see price moving downwards, finds a support, and you decide that you want to buy from a support level. And you execute a trade, but because of A, B, C reason, you decided that you have a great gut feeling, an inner certainty that this market is going to skyrocket. And if so far you used to trade with one lot size, or let's say 100 euros per trade, you decided this time you're going to put 1,000 euro on the trade and you execute, and you're sure that it's going to work in your benefit. This risk management misunderstanding is what kicks in the emotions and the fear and all the other emotions. They can be distracted for a trader. Then we have the emotional management. Discipline. When you become a disciplined trader, this helps you to reduce the influence of emotions like the fear, like to be greedy, which these emotions can lead to impulsive decisions, as the one we described. Risk management, emotion management, they are crucial aspects of trading consistency and discipline. And then it's the consistency. By following a well-defined plan, fosters consistent decision-making and performance. The reason I explain you so many times, guys, why it's important every time we enter the market as retail traders, trading CFD products, contrast for difference products like the currencies and the way we trade the indices, using leverage, we must go for more than one-to-one reward to risk. And we have to be consistent with that. Why? Because every time we lose, if our trading plan, put aside the scalping we do in the morning, if you participate on the morning webinars, but when on our swing trading, you never ever saw me initiating a position and don't have a stop loss in the market and put a reward at least 2 or 3 times. Ideally, I do it always 3 times, but it was times I did a 2-to-1 reward to risk. So every time we aim consistently to go for a 2-to-1 or 3-to-1, because we don't know the outcome, and that gives us a long-term survival in the markets. And another example of consistency, it's been so many months we do the morning webinars. Again, I refer to the morning webinars because that's something we can mention. You always see me initiating the DAX trade at a specific time, at a specific time frame. I'm consistent with that. And I prove that to you because I do it live on the webinars. I don't initiate DAX trade 1 minute before the London Open, 5 minutes before the London Open, 10 minutes after the London Open for that specific strategy I'm talking about, right? Always, it's at the same time, I'm looking at the same thing, and I'm executing the same thing. Always, always, always. That consistency is keeping me in the game for all these years. When I first started trading, yes, I was lacking consistency. I was lacking discipline. Absolutely. I'm not a machine, I'm a human. And I started the way most of you started. And I experienced all these emotions, of course, but I was lucky enough to be self-disciplined by choice and pay attention to my behavior and my action. And what really saves me, and it's something I was looking as a backup all the time, is the fact that I had a journal, a trading journal that made me the successful trader I claim myself to be, and I credit myself that today. And when we talk about the trading journal, I will explain you a little bit more in a while. Trading discipline challenges. We have pretty much 2 main challenges as traders all the time. First, it's the greed and fear, okay, but also the over trading, not at that extent as greed and fear though. Let's start with the fear. Traders' fear of losses can lead to missed opportunities or early exits. I'm sure it's very clear here and everyone can understand. When we are afraid of losing, that has 2 sides effect. Either we won't enter the market because we are scared, what if it's going to be a losing trade? or when we enter the market, if we are afraid that the prices will hit our stop loss, we will exit either with a very small profit or with a break even. And that leads to the outcome. It's better not to mark around first with our stop losses after we enter the market, after we are live on a trade, and to have a trading plan that is in line with our personality. It's in line with what we establish ourselves as, who we are as traders, so we feel comfortable to execute our trading plan. And and that eliminates the fear. Then it's the greed. Greed can cause traders to overstay positions, hoping for more and more and more profits. So simple to understand. I don't think that anyone needs more details on that. Over trading. I'm sure some of you are already smiling. You have some nice smiley faces. Now I don't see anyone, but if you traded more than a month so far, I'm sure you went through both emotions, right? Over trading, trading with trading because of overconfidence. I know what's going to happen, and that's pretty much a behavior of those who have a daily job, let's say 9 to 5, a normal job, which is normal for everyone, and they are looking to trade after they finish the job. They go home, they are tired from, and it's obvious if you work for 9 hours, 8-9 hours, if you're tired. You open the computer, open your MetaTrader, and you see an opportunity that it's not even in line with your trading plan. There is nothing there. You just push yourself to identify that as an opportunity because you want to trade. And many traders end up buying or sell. They don't even think where the stop loss will be. Maybe they don't even care. They think that they know what's going to happen. The market is going to favor them and it's going to credit them a little bit because they are good people or because they helped someone today and they did something good anyway. And they expect that, okay, I'm going to get rewarded by the market. People, they look for reward and they look for recognition from the markets. And that's what literally killing the traders, I mean, mentally in the market. Overcoming trading discipline challenges. There are a few ways to help us overcoming these challenges. First, to overcome fear. You can set some risk limits and you can use the stop losses I already explained to manage potential losses. When it comes to greed, predefine profit targets and just let the market either hit your take profit target or your stop loss, excuse me, and don't mark around. Endless opportunities appear in the market every single day. Even if we take profits on, let's say, at point A and the market move far and beyond that and for another 50 pips, it's okay, let it go. Don't blame yourself for missing an opportunity. I explained you many times, an opportunity that wasn't pre-planned, it's not defined as an opportunity. I repeat that, an opportunity that you didn't plan for that trade, it doesn't mean it was an opportunity. And don't say to yourself, I missed an opportunity. You didn't miss anything. You missed only if you didn't execute a trade that it was according to your plan and your strategy. And about over trading, you can implement a set of numbers of trades per day, per week, and or you can set, if you are trading percentages, you can say, okay, this week I'm willing to risk only, let's say, 10% of my account, or every week I'm willing to risk 5%. Depends of your risk appetite. The role of trading plan in maintaining trading discipline. Now, let's talk a little bit about trading plan. Trading plan is a guide outlining trading goals, trading risk management, and trading strategies. I left the trading strategies at the end. Trading plan act as a safeguard against impulsive decisions and emotional trading. Traders, they do a trading plan based on trading strategies. What about trading plan based on risk management? And what about trading plan based on trading goals? How is possible to have, and here is, guys, write this down, please. Traders, they do trading plan on strategies. It's normal to blame themselves when they mixed up with risk management and with trading goals. Why? Because they don't have a plan about this too. They have a plan only about how to do market analysis and how to seize a trading opportunity. But after you seize the trading opportunity, what do? How do you execute? And for how long you are in the trade? If you don't have a risk management plan, it means if it's Thursday and you are already down, let's say your account is down by 5%, and your risk management plan was telling you, hey, you are allowed it only to risk 5% on a weekly basis, and if you lose 5%, that's all for the week. You call it for the week, and that's it. How is possible this trader to execute a trade on Thursday? But because they don't pay attention to this stuff, they just trade without understanding what they really want from trading. And I'm not talking about how much money you want to make. The money, it's going to be the end product of trading. And it's something you cannot control how much money you can make. Control and focus on how much money you can restrict your account to lose, what strategies you're going to use, and what trading goals you want to have along the way. Like a trading goal, to me, for a successful trader, is a goal that involves not how much money I want to make per week, because you cannot control the market conditions, but how well did I execute my plan? Did I stick to the time frame I said I will stick for this week? This kind of stuff. The buying product, the end product of trading, it's going to take care of itself. Trading plan aids in maintaining discipline. Clear goals. A trading plan helps define achievable goals and expectations. Your entry and your exit criteria. Clearly defined criteria. It helps you prevent emotional reactions to market movement. And risk management, the plan outlines position sizing and stop losses to manage your risk more effectively. Key components of a trading plan. I put 4 key components that I believe they are important for a trading plan. First, it's the market analysis. You understand, most of us, we do technical analysis. And if you notice so far on the podcast, I mentioned the significant news for the week, and based on the technical chart, I kind of made some outcomes of possible performance of some currency pairs. Then trading strategies. Define the specific trading setups you will employ based on your analysis. Another important component, key component of a trading plan is the risk management. outline how to determine position sizes and where to set your stop losses. You can do this either in terms of price differential or pips or points, or you can do it based on currency figure like a dollar or euro, pounds, whatever you trade. Then it's time frames. Choose the time frames that you feel comfortable to trade. Some people, they don't feel comfortable to trade on the 1 minute chart. If you ask me as in how many time frames did I trade, I will tell you I trade in numerous time frames that they were available on the platforms, and they are available on the platforms. However, which one aligns with my trading style? If I interact in the market as an intraday or scalp trader, I cannot trade in any time frame that is above 5 minutes. It doesn't align with my personality. If you ask me now to go back and trade the 10 minutes, 15 minutes, 30 minutes, hourly chart, 4-hour chart, I cannot do that because I realize that that doesn't resonate with me. When I trade, the reason I scalp on the 1 and 5 minute chart, it's because that's how I feel more in control with trading. But you have to play, you have to go through trial and error to find out who you really are as a trader. And when it comes to swing trading, I find that it's more comfortable with me, the daily chart. So I do analysis on the weekly chart and I execute on the daily charts. Some traders, they feel more in line with their emotions and they feel more in control if they trade on, let's say, 15 minute or 30 minute chart or hourly candlesticks. How to create a trading plan that works for you. There are 4 aspects in that as per my experience. First, it's the risk management, then it's your trading style, your strategy, and how you enter and exit the market. Regarding risk management, I believe we have to determine our risk tolerance, evaluating how much capital we are willing to risk on each trade. And going back to the first statement and the first example I described, for someone who finishes work, goes home, sit in front of the laptop, want to place a trade, and forget about any risk management. If you want to do that, so just to feel comfortable and relaxed, have a demo account and just place everything there without affecting your live account. If you are trading though on a demo account, open a separate demo account and do this and relax on that demo account, okay? But if you are testing a strategy on an account, treat a demo account like a live account. It's going to help you to show appreciation and respect to the trading environment, and that's the only way to discipline yourself. Trading style. You choose your trading style based on your personality, based on your schedule, based on your availability. I said it many times. We are trading, let's say, currency pairs. Someone who trades Australian dollar Kiwi, the pair, and it has availability only during the London session, most likely it's going to experience frustration trading this pair. So based on your availability and based on your trading personality, there are currency pairs that they behave differently in different times along the way. So first, you also must understand the nature of each instrument. I can help you with that, not a problem at all. Strategy development. You develop a strategy based on your choosing analysis method, considering your strength and how to enter and exit the markets, you have to define your entry and exit criteria. And this is really important. It's a crucial aspect of trading profitability, in my opinion. Strategies for sticking to your plan in real-time trading. Emotional control. Focus on your risk management rules rather than emotional impulses. Please write this down. Trading journals. Guys, I cannot stress out how important is to use a trading journal. Trading journal is your guard angel in trading. Is your it's your safeguard in trading. I don't know what name, what label you will assign with trading journal, but trading journal is what eventually will make you the trader you want to be. You want to become. Note your emotional triggers. What lessons you learn. Just spend some time to create your journal. Just take a piece of paper, and you don't need to go and buy a fancy book or create Excel spreadsheets or Word documents if you don't want that. So just take a plain piece of paper. Today is what? Today is Tuesday. It's the 8th of August. I trade this. I felt that way. I was feeling scared about this price. I was feeling greedy about this. I think I over risk on that pair. And because you're going to trade, let's say you're going to take 2-3 trades a day maximum. If you are an intraday trader, I don't think so you're going to take more. But just try to put a couple of lines about each trade on, and then slowly after you could create a journal for 10 trades, you're going to find a template that you're going to just fill it out, and then you go and review it. Okay, don't just write it and put it on the side. Just review it as well, because that's going to help you to understand yourself as trader. Take breaks. Periodically step away from the screen to prevent overtrading and emotional exhaustion. Benefits that come with maintaining trading discipline. First is consistent profitability. Trading discipline leads to more consistent and predictable results. Emotional well-being, reduced emotional stress and more rational decision-making, improve mental well-being, and learning and improvement. Adhering to a trading plan enables us to analyze and learn from our mistakes. Okay, now what to do next? First, if you need to review the webinar, you're going to review it again when the team will upload on the YouTube in the next week or so. If you haven't joined our webinar, you can do that. So you can listen to our podcast on the website and everything. If you have any questions, please feel free to send us email, and I will personally ask from every one of you to leave some feedback after this session. All the feedback are anonymous unless you want to put your name next to the feedback, but otherwise everything is anonymous. If you find valuable in these sessions, continue. If you have something to say, express your thoughts, your opinions, your feelings. If you want to say anything about trading, that will positively impact these sessions. I will be excited to read them. So from myself and Admirals, we would like to wish you to have a fantastic day ahead. Thank you so much for your engagement and your participation. We really appreciate and value you as our client. And I look forward to see you tomorrow at the live trading webinars. Thank you so much. Bye-bye, guys.